Britain's economy is losing momentum. Official data shows the UK grew less than expected in the final quarter of 2025, adding fresh pressure on Prime Minister Keir Starmer, who is already facing political heat. Economic weakness, falling exports to the United States, and lingering trade uncertainty are now colliding with domestic political troubles. Now, Britain's economy grew just 0.1% in October to December quarter, according to the Office for National Statistics. Economists had expected double that pace at 0.2%, but growth was dragged down by weakness in services and construction, two of the economy's biggest engines. For the full year, Britain's economy expanded 1.3% in 2025, and that is slower than the Eurozone's 1.5%, underlining how Britain continues to lag behind its European peers. The sluggish growth comes at a politically sensitive time for Prime Minister Keir Starmer. Starmer has faced calls to resign over the Jeffrey Epstein controversy after appointing Peter Mandelson as U.S. ambassador despite knowing of his links to the convicted sex offender. Trade has been another major drag. UK exports of goods to the U.S. fell 10% in 2025, dropping to $81 billion. Vehicle production was hit particularly hard. British car makers were squeezed by U.S. tariff uncertainty and a cyber attack on Jaguar Land Rover. A U.S.-UK trade deal, which came into force in June, brought some relief. The deal cut tariffs on British car exports from 27.5% to 10%, though only for up to 100,000 vehicles a year. The pharmaceutical sector also faced delays. British drug makers were only exempted from U.S. tariffs in December under a deal that requires the UK to boost spending on American medicines by 25%. Despite U.S. President Donald Trump easing his most aggressive tariff threats, uncertainty has kept British companies cautious. Many firms have delayed major investment plans, weighing on growth prospects. The Bank of England has now downgraded its outlook. The central bank expects GDP growth of just 0.9% in 2026, rising to 1.5% in 2027. Interest rates remain unchanged. The BOE has held its benchmark rate at 3.75% as inflation remains above its 2% target, even though price pressures are expected to ease. Meanwhile, the labor market is showing strain. Unemployment now stands at 5.1%, close to a 5-year high. Still, some economists see tentative hope ahead, with inflation expected to fall and past interest rate cuts yet to fully filter through the economy. Lower borrowing costs could eventually lift household spending, but for now, weak growth and political pressure leave Britain's government with little room for error.